What's happening, guys? I hope everybody had a fantastic long weekend. We had a 3-day weekend, a 4-day work week ahead. It's President's Day. I hope you guys enjoyed yourself, and we're going to have a short week ahead. Market's been insane. We've got earnings left and right, which is, kind of helping with some of these big gaps and big unwinders. But, small caps have been fantastic as well. For me, this is my style market. February's been incredible. We've talked about, November, December, and even January. It was consistent, but it wasn't, there was nothing for me to really shout about. There's other people that were outperforming and doing fantastic, but for me, it was like, you know what? I'm just going to come and slowly, take what I see, and when the market heats up, I'll be there. And so far, that's been February. If you're not performing right now, that's okay. You shouldn't feel like, you're doing something wrong. However, if you're going backwards, that's where you should really kind of reflect and take a step back and, are you pushing the buttons because you feel like you're underperforming, because you see all these things and you're missing them? And because of that, you're sort of forcing trades and trading bigger and going backwards. If so, hit the pause button, because there's no reason for you to be doing that right now. Of course, everybody's got setbacks, but if it's just a continual, kind of churning down in this market, all you got to do is just not trade, right? Wait for your setups, your A-plus type setup. Some people perform in volatility, and other people's have a ton of trouble. And the worst thing you can do is try to catch up, size up, and outperform in a market where, obviously it's not your cup of tea. Nothing wrong with that. And like I said, November, December, January, I'm grinding along, but, I'm missing some of these big trades. And if I were to kind of press and try to catch up on the ones that I had missed, I probably could have gone backwards pretty nicely. So for me, I'd rather just be kind of even or up, right? And, obviously you're going to have losses here and there, but if it's a continual grind down, you need to reflect on, exactly what you're doing, reevaluate, and remember, all you have to do is not trade to stop that bleed. Wait for the names to come into your wheelhouse. And what that means is, where do you perform the best? What's your best style setup? To me, that's my A-plus type setups that I go over all the time. But if you're forcing it when it's not a high quality, high probability trade, and you're wrong and you're sized up, it's going to be choppy. It's going to be red. It's not going to be pretty. So be aware of that. That's on you. And again, not everybody performs in volatility. Right now, February's been fantastic for me. Before that, it was a little bit slow. But identify what is best for you and stick to that. First and foremost, as promised, before I get into the Centerpoint deal, as always, we give away lots of free stuff. So, Mr. Nat Norwood, you've got the free shirt for this week. And J. Harrison 3661. You have the box of Icon Meals, which is the food that I eat every single day from Todd. And as long as you're in the U.S. If you're not, we'll pick somebody again next week. But we will ship you out a box of food. And just email me, webmaster@investorsunderground.com. All right. Let's get into it. So, as you guys know, whenever we do a sale, right? The rare sales that we do, such as Black Friday, Cyber Monday. We like to bundle things together. We get a bunch of different free, legitimate free, not just free, trash that you don't want, but real value, real things of real value. And we bundle it all together to make it the best sale of the year without really many excuses as to a reason why you shouldn't do it. And so Centerpoint's been working on revamping their entire locate system. They've been revamping all their tools, and they've launched Centerpoint Edge, which you only need to trade 100,000 shares to get it as a client. But with that, you get a lot of free things, which I'll go over. And when we were going back and forth, I told them if we just do the same deal as everybody else, the same deal that they typically see online, we're not gonna get anyone. And so what I told them is we really need to make this an unforgettable, undeniable deal. Too good to be true, too good to be to pass up. And that's exactly what we did. One of the biggest issues that I see both in IU and Twitter is not being able to short. Not necessarily in general. You know, sometimes you're in a bad broker without, many locates. But more so having the locate, and then when it's time, it's gone, right? So that's one of the biggest things I think is being able to pay for a locate, and it's yours, and then you're able to use it at any point during the day. Places, for example, interactive brokers, they might have it in the morning, or E-Trade, they might have it in the morning, and you're like, all right, got it. Trade comes, guess what? No borrows. And you just prepped all day. You were just ready for that trade. And now you get to watch it because there's no locates. And then one of the biggest complaints I've seen is locate prices. And, there was a period of time where locate prices got extremely high across all brokerages. And there's also been some times where they're extremely low and people feel like they've got to get to that broker because the pricing's so low, and then they get there and there's no inventory. Great. There was 7,000 shares throughout the entire brokerage and it was only 0.001. So yes, you can showcase, hey, it was only 0.001 a share, but there's 7,000 shares for the entire brokerage firm. That doesn't count. So the biggest thing with Centerpoint is not only to have they revamp their entire locate system, but they've got the inventory and they've got the cheap prices. And it has been absolutely incredible to watch this transition over the last maybe 2-3 months as they've been launching these different routes. And it's been great. So the deal, 60 days. It's 2 months. No commission. Account minimum is lowered from 50K to 30K. Lower barrier to entry. Free access to Investors Underground for 3 months. Free access to textbook trading and Tandem Trader. And that's not it. Like I said, they have Edge. Centerpoint Edge is basically for anybody that trades over 100,000 shares per month, which is not a lot. That includes TrendSpider, Trade Ideas, Delusion Tracker, and Trader Sync. Now, personally, I use Trade Ideas every single day and Delusion Tracker every single day. Those are hard costs that if I want to have, I have to pay for. But if I'm going to be trading anyway, they're included with my account at Centerpoint Securities. So you're going to get those for 90 days. All the benefits of Centerpoint Edge for 90 days, 3 months. It's over $5,000 plus free commissions. And the fine print is there is no fine print. So you can click the link, you can check it out. It is for a limited time. I think we're running it for about a week and a half or 2 weeks. If you have questions before signing up, you can email Ryan at centerpointsecurities.com. I will put his email in. And for everybody that opens an account in the next week, I will send you an IU t-shirt. So that is the deal. It's never been done before, and it is a no-brainer. I hope that you guys will end up at Centerpoint Securities. It's where I trade every single day. It's where I've been since day one, and I don't plan on going anywhere else. That is my main broker. All right, let's get right into Sunday scan, which happens to be a Monday night scan. All right, guys, so for the second part of Scan, where I go over what I'm watching for the week ahead, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're looking to be told what to buy, you're in the wrong spot, nor would I ever suggest that. I would not be looking for that. This is about you becoming a better trader, not becoming a better sheep, a better follower, or any of that. This is about you turning what may be a hobby into a career. This is about you identifying what fits best with your own personality as a trader to then perform from that point forward. So, main watches. These are the ones that I feel like have the best chance of me trading. Then I've got failed follow through momentum. Then I have continuation. And then I have staying familiar. And main watches are the ones that most likely to trade. Failed follow through, I'm waiting for that particular setup, which if you've been following along for a while, you know what that setup looks like. I've given you multiple examples on Sunday video. Just a couple times ago, I went over and told you guys to memorize a particular setup. Continuation side is ones that I kind of have a long bias towards, like the charts, like the setups, or maybe I'm swinging them. And typically I would state if I was. And staying familiar is just charts that I feel like maybe I won't trade them Monday, Tuesday, Wednesday, but I want to be familiar with them. I want to know what where they're at in their move. I want to be familiar with that either sector, or that particular name, and maybe set a price alert or two, because when and if it gets to X or fails and falls to, Y, I should be interested. And the only reason or the only way that we see that is by staying familiar with these setups and where they are in their trends. So, DraftKings, first and foremost, really great opportunity. Another example of sort of letting this thing exhaust out. Wait for the failed follow through setup. Let it fade. Let it rebound and then fail to follow through. Remember, we don't know, is it just shorts kind of hammering in, or have sellers finally arrived? Even if it fades down, we still don't know, because what if it swipes right back, right? And you've hammered, and then it swipes right back. Guess what? Now you have XL size, no padding. You went from green to red real quick, and now you've got emotions to deal with. So for me, DraftKings, I always put on a starter in these situations. TWLO this week, Roku, all these different names. But remember, when I put on a starter, I'm talking about 5, 10%, a max. If I have high conviction, a max of 20% of what my anticipated size will be. Most people, when they try to trade these things, they call it a starter, but really it ends up being half their size or their whole size, right? They put on 1,000 shares, they were going to only use 2,000 as their max size. Or they added, now they got 1,500 of those 2,000. That's not a starter. So if you know that typically you have a tendency to step in front of stuff with too much size, you call it a starter, but it's not, just wait. Just wait until key levels start to break down and give yourself a better edge. So for me, this was a nice failed follow through sort of setup. This should look familiar. I think 2 Sundays ago, I went over in depth, kind of seeing this setup. Flushes down, comes back up, and starts to fail to follow through. Again, you want to, this is great. It's fading off, but you want to see it come back up and fail before you start to get any conviction. The reason why you pay attention to levels on the way down is because if you size up, you want to proactively cover. You want to anticipate the fact that it's probably going to soak at that range. And it did. You can see this 2070s level, and then it rebounded back up. Then it started to stay heavy. By putting these levels in there on the way up, 2020s to 2050s was the channel that I was focused on. But as you see, as it comes back down, it starts to consolidate. It's congestion around those levels. And that's the whole point of this, is it's a reminder, a visual reminder. Hey, you sized into this trade, but this is really a key level. There's a good chance it holds here, but if it doesn't, you can always rescale back in. So I always like to be a little bit proactive, cover first, ask questions later. And so these are the same levels that I'd be using in the week ahead, Tuesday. Ideally, we have a gap up, some sort of 2070 to 21 push, something like that, and then starts to fail to follow through. If not, and we start to maybe open week 2020 holds, 2050 starts to firm up, in my opinion, we could have a nice little breakout, and it has room, easily to 22 or more. So again, it's kind of like AI. You can come in and be super, super biased, or you can take each day as a new day, a fresh day, and be able to shift with your thought process. Just like SI. SI, for example, huge opportunity this week. And when Bitcoin shot up through 25,000, SI just sat there. And it was a moment where I was like, hey, you know what? That should have gone. And I ended up switching my bias. I sold out, and then I started to short the name. And being able to flip that bias and not maintain like, hey, this has to squeeze. This is going to the moon. This is, all these different, emotions that you might have. I don't typically have it's going to the moon emotion, by the way, but I'm just trying to connect with any of the Reddit crowd that may be watching these videos. However, being able to come in and not have too much of a bias in any one direction is going to allow you to maybe capture both sides of the move, or at least not give back a ton by forcing what you think should happen to happen when ultimately it doesn't. And that was something that I always used to have trouble with, is trying to force my bias to be right. And I'm right. It starts to go down, but I thought it was going to go here. Force it, still goes down. Force it, still goes down, and you end up turning a really good trade either flat or red. Next up, we had TOST and we had XP. Similar concepts. I traded these both out of the gate. Reactive trades, flush down. My thought process on XP on Friday was basically a replica of TOST. So TOST had come down and we had a nice flush off the open, and then it started to rally back before it faded off again. So the game plan that I put in IU was basically go back and look at TOST the day before, and looking for the same thing on XP. And that's exactly what we got. So it was nice to have that opportunity. And hopefully we have another one coming on Tuesday where maybe we have a gap up and it fades back off to the lows, or maybe it gaps down and it has a massive reversal. But either way, right now, over the next 2 to 3 days, in my opinion, there'll be some great opportunities with this TOST and XP. And these are surrounding earnings. And typically I will trade a possible reactive trade off the open, which would be less size, but then 9:45, 10 a.m. plus is where I start to get maybe a little bit more conviction. And I basically want to go with the trade. So, you could come into the market short, slams down, great trade, but then 9:45, 10 a.m. plus is just slowly grinding up. And I'm not looking for the short at that point. I want to be part of the trend after 9:45, 10 a.m. plus. Before that, the market's trying to figure out what it's going to do. It hasn't identified which way it's going to go for the day. And once it works out all the emotional, back and forth and fight off the open, that's when I start to form a little bit more of a bias, like, all right, I'm going to scale into this trade. And then last but not least, Airbnb. This is a possible, I did miss this one, fantastic fader. But I'd love to see some sort of morning pop, and we could be looking at a gap fill. So ideally, we get into this range. I always kind of look at where it was having trouble before. So sort of an ideal exhaustion range is around that 132.80 to 133.30s, 50s, somewhere around there. So basically 133 shove, and then maybe failed follow through. And there's that potential that we could come back and fill this gap down to 120s. So we'll see what happens with that. But again, I would say for Tuesday and the week ahead, there isn't an A+ setup for me. And being aware of that is half the battle, because like I said, I used to come in and try to, push buttons anyway. And that doesn't mean that, come Tuesday we're not going to have, 10 names that might check the box. But I just know that I need to be cautious off the open, because there's no high conviction trade for me until possibly 9:45, 10 a.m. plus. And just that one change alone has helped me so much, because I used to always force stuff off the open. And I'm talking 3, 4, 5 years ago. And now, patience. And you'll be surprised how clear your head becomes, and how much, probably how better you trade just by making that minor adjustment. IBIO, really incredible opportunity. This one actually was a swing last Sunday video. It went 50% and then it faded all the way back down. And then it gapped up, I think 150 or 170%, something crazy. Or maybe about 100%. But no position, didn't have it after that, after the first 50% move. But familiar with it, and know H.C. Wainwright was part of it. They always, they're one step ahead. And who knows what kind of relationships they have in the street. And, the thing about this one is, when everybody knows, it gets crowded, right? And it's obvious they're going to raise money. It's obvious they need money. It's all of this is obvious. But the more people that know that, which is everybody, if it stops going down, it's going to go up, and it's going to go up fast. Like this, or it's going to stuff and then slam down. That's the risk, right? So whenever it should have died, should have filled me. And, I tried in the 130s. I tried at the 135s. I tried 140s. And to the point where I said, you know what? I was leaving early on Friday, and I was like, I'm not going to deal with a swipe. So I got out. And about 10, 15 minutes later, shot up to 190s, almost $2. Fantastic opportunity, because it was so crowded. And this is exactly what we were prepared for. I said it on broadcast. I said, if it's not making lows, 10, 11 a.m., if it's not continuing to stay on lows and it starts to flatline, your risk goes way up. And I gave an example of, I think it was ATNP or something like that. But a lot of times they will swipe it up before they do the filing, before they raise money. They didn't in this case, but they did do the swipe up, made everybody pay, and then walked from the trade. So it was a fantastic opportunity. I started back in a little bit early, and then I scaled after the exchange, 190s, 188s, 185s, 180s, 170s, and covered it all, 150s and 140s. So really great opportunity. Really happy to been one step ahead on that one. It's not always the case, and sometimes, these are the swipes that just give you the headaches. Exactly what I try to avoid. So for me, I'm sitting there, I've got size. It's Friday. Do I want to push my luck? Or do I say, hey, you know what? It is telling us it's hard fills. I'm not getting filled on the bid side. Every time I go up, I'm still not getting fills. Read the room, right? And by the time everybody says, you know what? This isn't going down, I got to cover, you get that parabolic move. So, gap up, 150, 160s would be ideal, but I doubt that it happens. But ideally, gaps up, and then probably fade off back towards sub 1. See what happens with that, though. FSLY would be another one that I am interested for potential failed follow through. However, just because it's on failed follow through does not mean I'm bearish, right? I'm looking for, if the market were to come in, then I'd probably be interested in fading this thing. If it starts to consolidate at 16, this could easily go to 18 or higher. So again, just because it's on failed follow through does not mean I'm bearish. I am looking for a failed follow through setup to participate in. And if it doesn't happen and it starts to firm up, avoid it. And last but not least, on the failed follow through section, Tal. Tal has been a nice runner, and nice breakdown on the daily there. Same deal with GOTU. I'd be looking for the same thing. So these are just old lines that I had from prior days, prior times trading it, and it's just kind of funny to always see how they line up, because there was a reason why I put them on there a month ago. And then you can see that it's pretty much consolidating around those same levels anyway. But anyway, Tal, go to, higher the better, failed follow through. And you'd probably want China to agree, right? Because if PDD is up $10 on Tuesday, then obviously the China basket will probably be up, and it's not something that you're going to want to fade. Continuation side of things, DCFC. This one I've been very much familiar with and had noted it this day. There was a lot of buyers, huge volume over here, and it's been holding since. And I've mentioned it each and every single day, but I just never got there. But I am interested if, flushes, the day that it flushes out 20 cents off the open, I'm interested. Potential dabble for a big picture idea. Right now, you probably want to assume that it's going to have trouble at 220s. That was the prior top here with the heavy volume day. But if it starts to firm up, say it flushes 180s and starts to base at 2 and starts to firm up and go for 220s, if I ended up getting long, I'd probably want to sell some there. If it starts to base and firm up at 220s again, then we could have that secondary move and really go on. So my thought process is that this might start to trade a little bit less thick. It's been a very thick mover, and I think that it actually might start to thin up and become a different trading stock. I think somebody accumulated a pretty big position, or a couple people did, and I think that it is on a journey higher at this point until it proves otherwise. Same deal with TCBP. You guys should be very familiar with this one. I had mentioned we've traded it many times in the past, but I noticed that underlying bid. There's been a buyer in the tape. There's been somebody soaking it up over the last month. So the last couple Sunday scans, we've talked about this. I'm currently long. I also have some of the warrants, which TCBPW. They were at 13 cents, 11 by 13 cents when I had mentioned it, and they pretty much doubled in the last couple days. But at any rate, this has a catalyst on Tuesday. Just be aware of that. Again, I've mentioned it many times, but it's been about a $2.50, almost. Sometimes pre-market it was $8, so almost a $3 move from the idea that was given, and that means don't be afraid to lock in along the way. Otherwise, we've got AMAM, and we've got SERA, and we've got INZY. Those are the last ones on the continuation side. INZY possibly could end up like AMAM and CERA, right? So you've got this transition day is what I call it, and then they let shorts kind of win, and then they come back at it, and then they get T+2, where they get the buy-in potentially from the overly aggressive shorts, and this one's been trending pretty well. And this has been a theme. It's nice to see. There's been a lot of longevity in the moves lately, where they let shorts win and let them hold it over, and then the next day they swipe it up. They let them win and swipe it up again, let them win. And what happens is they do everything that shorts need to see to continue to scale. But then as soon as they're about to maybe break even or catch a break, it swipes back up the other way, right? And so that you want to be aware of. You don't want to step in front of it, because what happens is then they turn into a move like SOBR, if you remember over here, or SMMT, and it just continues to go on. So yes, they probably unwind in a big way, but it may not be on your timetable. So just be aware of that. Review SMMT, review SOBR. Very, very, very similar. And whenever these things kind of hang around longer than they should, again, take note. Realize that. Don't ignore it. It's telling you. So anyway, that's it. I've got a couple others on the Staying Familiar. You guys can click through and check it out. But again, Centerpoint link will be in the description. If you've been on the fence, there literally is no reason not to, go. So we made it incredible. We made it special, and we're giving away a ton of free stuff just for you to become a Centerpoint member, a part of the family. So that's it. We'll see you on Tuesday. Hope you had a great long weekend. And again, we've got a 4-day week ahead. Be patient and set price alerts.